Welcome to our webinar discussing escrow accounts in 2021, Driving Customer Satisfaction with Sterling National Bank and Cashback. I'm Sherry Monroe, and I'm delighted to be moderating this conversation today. With the total value of escrow deposits in North America estimated to be more than $1 trillion, it has become increasingly important for these deposits to be segregated and managed efficiently in an environment that has a positive effect on the customer experience. An escrow service should reduce administrative overhead as well as risk while saving time. We are pleased to have partnered with Sterling National Bank to explore how banks can deliver an improved escrow solution completely tailored to their customer sector, size, and complexity of escrow requirements. Today, we will discuss the 4 biggest challenges facing the escrow market, what should be included on an escrow functionality checklist, opportunities to differentiate your bank, what to look for in your escrow account solution, and of course, ways that your customers will benefit. It is my pleasure to introduce Mike LaCava, Senior Managing Director, Enterprise Product Management at Sterling National Bank.
Thank you, Sherry. I'm happy to join you and appreciate the opportunity to share my thoughts on this important topic. Let me first start by providing a brief introduction about myself and my role at Sterling. I have worked both on the IT and product side for the last 40 years, with about 35 of those years in financial services. And my majority have been in roles that focused on treasury management, commercial banking, and digital client-facing solutions. This April, I will complete my 3rd year at Sterling, and my current role is to oversee product management and strategy for the bank, which includes our commercial, business banking, and consumer businesses. When we sought to find a more contemporary solution for escrow management, I identified the cashback solution for the bank and serve as executive sponsor for our current escrow management initiative. In the next few minutes, I will discuss my thoughts on key market challenges, our expected escrow functionality checklist, and the differentiation opportunities. Let's start by understanding the need and the key market challenges that exist for many today. There are several market challenges that would lead one to improve the escrow management process. I settled on 4 key reasons, which I will walk through for today's session, starting on the top left. First, many financial institutions rely on the use of their core DDA system and traditional accounts to create escrow sub-accounts for their clients. This process places a heavy reliance on the bank to not only do the majority of the work, but also presents several challenges. Here are a few that come to mind. First, the client and the bank must exchange paperwork or setup instructions for the bank to complete the setup or to maintain sub-accounts. As a result, there's a lack of transparency in the process, since the clients often can only see the results once completed. That lack of transparency also cascades to their clients. The bank cannot anticipate the amount of effort that may come in for the setup and maintenance of sub-accounts because that's only known by the client. And we all know that clients always expect a quick turnaround. Because the bank is using a core DDA system that was really designed for operational accounts, there is a cost and overhead in this process and special reporting to reflect the escrow sub-account needs. Factoring in situations like the current pandemic only complicates this process and communications, given the impact on client and bank staff due to office displacement, unexpected absences, and other issues. This really leads us to the second challenge: time, effort, and expense. Let me break this down a bit further. The time to carry out this process is less than optimal and can range from hours to weeks to complete, given the traditional methods used to communicate and complete the changes, even outside of the pandemic challenges. The effort is not optimally placed where it would be most effective, as the client, who has the need and info on the sub-accounts, must convey that to the bank to carry out the effort and any follow-up. The expenses can multiply based on a number of factors, such as the types of communication methods used, the effort for the bank staff to carry out the work and for both sides to follow up, as well as the operational and real cost of traditional accounts on the core DDA system. There is clearly a better way via digital self-service. The key challenge is to innovate with a solution that was designed for this and can support a more optimal digital process. By doing so, after the initial operating accounts are established, the bank and the client can focus on this more optimal self-service process where the client can set up, maintain the sub-accounts on their own, handle the auto manual matching of transactions including exception processing, review the information that they would need to see and action for the sub-accounts as this is visible to the client and can be made visible to their client. Finally, this last market challenge simply reflects the notion that some banks have already addressed all or parts of the process. Not doing so will very likely put a bank at a competitive disadvantage without having a digital self-service virtual account solution. It's simply table stakes or required. Based on the need for a better solution, I thought it would be appropriate to provide a checklist of the expected functionality that we viewed as critical for us. Many of the checklist items on this page were highlighted as challenges on the previous slide. As a result, I won't touch on every item on the slide, but instead select a few to discuss. Clearly, all of the operating account setup and maintenance by bank staff remains a requirement. The sub-account setup and maintenance functionality on the client side as well. Cashback includes a unique capability to enter or import expected receipts to facilitate an auto matching process. The intent is to reduce manual matching and to streamline the exception process. A key part of this process relies on the reference information that will be fed along with the daily account balance and transactions from the operating accounts. This daily interface will allow the virtual accounts to reflect the activity. Interest must be calculated and along with tax reporting fed to the appropriate bank systems to facilitate this process. Statements can also be made directly available for the sub-accounts within the solution. Required user roles must be supported by self-administration and enforced, and access to the solution can be far more extensible, as well as integration options which exist to allow for file or API-based data exchanges or system linkages. You may have noticed the series of bullets around contemporary technology. These are likely key to your bank's IT and client experience strategy as they are to ours. Cloud-based solutions and the knowledge that it can scale based on business growth are important considerations. In addition, the ability to consider future needs beyond escrow, such as payments and potentially an alternate core, could be facilitated with such an offering, although out of scope for our initiative. Having touched on the market challenges and the escrow functionality checklist, this is a good time to bring it home by looking at the resulting differentiation opportunities. So if we start from bottom left to top, let's cover them one by one. Auto matching. As I mentioned previously, this is a unique capability within the solution, and it provides an ability to minimize the client manual matching and exception work by leveraging expected receipts to facilitate auto matching. Less work for the client in the end will be well appreciated if this can be achieved. To the right, process and cost efficiencies. We expect that this more optimal solution and process will reduce client sub-account opening by approximately 3 to 14 business days and account business maintenance by at least 1 day. Naturally, the time savings will depend on individual situations. The workload is now also distributed where it makes sense and can be best administered. Right in the middle, self-service is a key differentiation opportunity. The self-service virtual platform provides our clients with visibility and allows them to open, maintain sub-accounts at their discretion, eliminating the need to send email and paper documents to the bank. Statements and other information will be at their fingertips. Equally important is that information reporting on the online banking solutions is no longer hampered with all of the sub-accounts that are typically reported there along with their operating accounts, because the sub-accounts are no longer traditional DDA accounts on that system. Lastly, and really most importantly and encompassing everything on this slide, is the client experience. This is greatly improved as the solution allows for the required account structure to be created and the operational flows to be reflected along with the customer journeys to best support business practices and regulatory requirements. We are confident that the results will provide a winning client experience for the bank and the client. Thanks for the opportunity to share this with all of you. That concludes my segment of the webinar, and I'll pass it back to Sherry.
Mike, thank you for these insights. It's truly invaluable information, and we really appreciate you sharing them today. I'm now pleased to introduce Tim Martin, Head of Product and Pre-Sales at Cashback.
Sherry, thank you. And Mike, thanks for your words earlier. My name is Tim Martin, Head of Product Management and Pre-Sales. And within my product management role, I'm responsible for our product roadmap, which essentially means ensuring the product meets the needs of our current and future customers. Today, I'm going to look at the Escrow account service and really look at it more from a product perspective. Cashback's solution has been rolled out globally. We have a number of different customers across different geographies, all utilizing the product for escrow accounts. And obviously, these are called different things in different areas, whether you're looking at controlled money accounts in Australia or trust accounts. And the set of regulations we see across the globe, whether we're looking at the CAS regulations in the UK or MiFID regulations in Europe. What we do see is that there's a common theme of common requirements. But obviously, when we're looking at the detail, there are different variations for these solutions in different geographies. And obviously, from a technology and a product point of view, what we're looking to deliver is a common solution with the flexibility so it can be configured to support all these business cases in the different areas. Over and above the escrow situation and the escrow accounts, there are multiple other use cases where the technology comes into play. And we see our product being used both for local and state governments, in wealth management, in charities, across various service companies. We also see the product used in a more generic fashion when people are looking to deliver payments on behalf of or collection on behalf of type requirements. Just looking in a little more detail at the solution and functionality and the key features. The heart of the solution are the virtual accounts. So the core system needs to support this virtual account structure, and obviously with it, the necessary compliance and controls that we see with virtual accounts. Without any regulation or ability to have the accounts regulated, then we don't get the controls we require. So the heart of the system and the core of what we're doing in Cashback is all around the virtual accounts. From this perspective, when we're looking outwards, really the focus now addresses and looks at how do we support the end customer. So from a product's perspective, whether we're supporting the end customer in terms of their account management functions, whether we're looking at their receipts or payment processing, the essence of what we're trying to do here is enabling the customers to work in a more efficient manner. Associated with this, we're looking at the various integration components as well, where we may see larger organizations taking advantage of our API connectivity, other organizations looking to use more host-to-host connectivity to provide end-to-end integration, or potentially a simple batch upload for the smaller customers. The key is for the solution to offer the various levels of integration to support all customers and to support all their needs. In terms of the automation and touching on some of the points that Mike made around the auto matching, again, that's a key requirement. If we look at the traditional bank world where we know what's happened, what we're looking at from a virtual account platform is that we can extend that and look at what's due to happen. And then suddenly what appears for the customers is not only do they identify what hasn't happened or what hasn't matched, what they can also identify is who hasn't paid or are there any payment discrepancies. So these are key differentiators that can drive business value for the end customers. Looking at a couple of scenarios that we see, common use cases. The first one I'm going to look at is around a property manager. It's a common use case to look at tenancy deposits, where we know the tenant deposit has to be segregated in a separate tenant account. We need to be able to accrue interest at those tenant accounts. But at the end of the day, it's a relatively straightforward service where we can take common deposits and then allocate them out to individual tenant accounts and provide the necessary reporting and controls against those accounts. But if we take that story and extend it somewhat, what else is it that the property managers require? And obviously, the larger the property manager, what they're looking at is they're receiving a number of regular payments on an ongoing basis. So they've got monthly or quarterly payments coming in that they need to manage. And the nature of their business is, the more efficient they are, the better SLAs they can offer to their customers, the landlords. So what do they need from a solution? Well, they need the solution to be able to take in a single receipt on a regular basis and allocate it correctly. But obviously, the customer's single payment includes service charges, insurance, and rent. The customer's going to deposit a single payment. So what we need to have is a solution where we can take a single payment, break that out, and then apply the rent to a property account, services to a tenant service account, insurance to insurance account, all along having the necessary controls to identify non-payments and the ability then to report downstream to the property management system so they get the end-to-end cycle and then can manage these monthly processes in a more efficient manner. This is a common use case that we see across many of our customers, and this is one of the reasons why 8 out of the 10 largest property managers in the world use our platform. Looking at another common use case, we're looking at the asset management space here. Again, a standard requirement is around the segregation of client cash. So as part of an investment process, the client cash needs to be properly segregated and controlled. Now, where this is done as an independent process, the client cash can be segregated and controlled, but is not necessarily tied in to the settlement and trade life cycles. What this leads to is for the asset manager to then have to manage after the fact if there are any breaks. So that they're managing the cash on one side, and on the other side, they're managing their trade life cycle. And on the settlement date of the trade, they're going to fund the market trade, and afterwards they'll find out, did they have the money to fund that correctly? And if they didn't, it'll be uncovered in a reconciliation, and then through that, they will then have to resolve it. And as we all know, managing issues after the fact and clearing up issues is a lot more time and resource intensive than having a proactive management solution. When we look at the same scenario when delivered through the cashback virtual account solution, a couple of the key requirements come through. What we see is that up front, we can load in the system what's due to happen. So as the trade is booked, we can load into the system that we're expecting to receive cash. We can also book a forward-dated transaction to support the trade settlement, but only have that triggered on the receipt. So now when the receipt comes in, the cash is booked to the client account, that triggers the ongoing settlement. And what we've turned is a reactive reconciliation-based process into a more proactive process where we're managing it actively as and when issues occur. Through this, we can get a more efficient process for asset managers. Hopefully you can see the uses of cashback as across standard escrow use cases, as well as some of the extended use cases that we see both in our asset manager and our property management scenarios. To summarize from our side, customer self-service is the starting point. That is a must-have, something that we need to deliver. But obviously the goal is to drive end-to-end automation. Otherwise, all we end up doing is shifting a manual process downstream to the customers. And what we want to achieve is end-to-end integration. From our side, the solution is always focused around the customer processes. How can they be more closely integrated with the bank systems? This then allows the customers to track what's due to happen, what's going on our side, having the automated connections through to the bank. Overall, what we're driving towards is a more efficient process, not only more efficient for the bank, but a lot more efficient for the bank's customers. Thank you very much, and I'd like to hand back to Sherry now.
Thank you to both Mike and Tim for sharing your expertise about the escrow market with us today. It is much appreciated. At this point in our conversation, I'd like to invite our audience to ask any questions that they may have for Mike or for Tim. Thank you. Thank you, everyone, and thank you for submitting some of these questions. The first one, I think, is for you, Tim. Can you tell us a little bit more about how the solution can automate the receivables processing?
Yeah, sure, Sherry. So there's a number of approaches within the solution that support this. the end of the day, we want to make the process as streamlined for the end users as possible, and obviously looking for this level of automation. So firstly, it can be straightforward with a set of rules set up. So for example, where a customer reference is applied to the transaction, we can automatically post using those. A little bit more involved is that we can start using expected receipts in the solution, so that with the expected receipts, the things like remittance advices and invoices, they can be loaded up into the system. Not only do they tell you what's due to happen, we can use those to match and automatically post the receivables into the right accounts. A third one we're seeing increasingly used now is through having the escrow accounts being externally addressable, so that we can create many addressable accounts and have payments directly routed to the escrow accounts. And then finally, within all this, having done as much as we can automatically, there are options in terms of having the solution suggest matches. So this is where the users still need to perform some processing, but we can use logic in the system to build up some rules and learn over time and start suggesting where we reckon the receivables should be posted. So a number of options there. At the end of the day, moving everything towards an exception-based solution. Hopefully that's answered that question.
That's great. Explains it very well. Thanks so much, Tim. I'm going to keep you here, if you don't mind. There's another question I think you're best to answer. What is the turnaround time for creating new escrow accounts?
Yeah, sure. So for creating new escrow accounts, I mean, the short answer is it's immediate. I mean, the transition from moving from a DDA-based solution to a virtual account-based solution for these escrow accounts is that it's full self-service. So the end customer can create the accounts as and when they need them. And not only is it about opening up accounts within the user interface, options around creating some batch imports so that a set of accounts can be opened in one hit. There are options around API integration that I know Mike talked about earlier, where the customers can hook up their systems and through API calls, post-transaction, post new account openings into the system. Within all this, there is a control framework. So where necessary, the control framework allows banks to introduce some additional steps where possible. So we can get the accounts created, full self-service immediately for the users, but if the bank needs some controls, we can also add those in as well. Okay.
That's great. Thank you. I think that, I don't know if there's anything else you want to add. There was another question around how are the controls and account segregation maintained? Is there anything else you wanted to add?
Yeah, so on that point for the account segregation and the controls, that's the heart of the system, that to have these accounts and to keep the regulations, we need to have everything fully segregated and those segregations in place. The system's a ledger-based system, so it deals with double entry posting. And with that, we create the posting rules, we can control the cash flows, and that means that all the money movements within the system are controlled, so that if something's incorrectly posted to the wrong escrow account, it can be replayed and put back to the pooled account and posted in the correct place, but will eliminate the cross-transfer across the different escrow accounts. So yeah, it's that double entry postings that are heart of the system that keep those controls in place.
Great, thank you. Another question here that's just popped up. What are some other common customer types beyond property managers or asset managers that would use this type of service?
I can pick up that one if you like. So we see a wide range of organizations. So if I first touch on the types of criteria there are, anybody managing cash on behalf of somebody else, anybody in a regulated environment, organizations where potentially the accounts are temporary. So the types of organizations, we work with charities, we work with media companies, we work with local and state governments. And then on a broader sense, we work with any general corporate that is looking to consolidate and create shared service centers. And the virtual accounts can be set up to support POBO and COBO type relationships.
Tim, it's Mike. I think I can add a little bit to it too as well, if that will help.
Yeah.
So we also see the need in the legal space as an example. Also, to some degree, there's been some interest in the not-for-profit area too as well. Some of them I think you've covered in a more broad fashion, but I know that since it was specifically asked about like property management and asset manager, I think I would throw them in so that people create that relationship.
Wonderful. Thank you. And Mike, one more question that I can see right now is, what is the main customer benefit in using the new platform?
Sure, Sherry, I'd be happy to answer that.
Thank you.
Yeah, I think the main point around this, and I tried to summarize that on the last slide, but this really flips the process from a traditional manual mail approach or email approach, et cetera, to what's really natural and expected today, really a digital self-service offering. There's some real clear benefits in time, visibility, and efficiency on both the client and bank sides, especially if the majority of the allocations can be achieved without, with minimal manual effort. And I think if you put that all together, it's really, really, really key, because the workload is really distributed in the right places, and the process is far more efficient. Now, that would be the best way I would view it.
That makes so much sense and very helpful. Thank you very much. At this point, I don't see any other questions, and out of respect for everyone's time, I would like to take this moment to thank Tim and Mike for sharing their insights about the escrow market. I hope everyone has learned what they came to learn, and we are happy to answer any other questions post-presentation that you may have. And we would really sincerely like to thank all of the participants for taking the time to join us today, and I hope you have a great rest of your day. Thank you.